All right, joining us right now to talk more about the Fed, the economy, and the state of M&A is Peter Orszag. He is the CEO of Lazard. He's also a former director of the Office of Management and Budget under President Obama. And I'll throw this one at you first, Peter. This idea of needing to wait for at least another 3 to 5 months of good inflation data before you can see a rate cut, does that play into what you would be expecting from the market?
Yeah, and look, I think the market is now much better aligned with what the Fed is likely to do, probably still a touch too optimistic. I agree with the commentary that was just expressed. I think the odds of a summer rate cut are exceedingly low, barring some, financial crisis or something dramatic. And investors should be instead focused on September or perhaps November, again, assuming that inflation continues its downward path, which is what I expect it will do.
And if that's the case, does it change anything that you have in the plans? If we don't get a rate cut, let's say even in September, what do you see in terms of the health of the market and maybe more importantly, the health of the M&A market, which we've seen a real slowdown in M&A over the last year and a half or so because people have been waiting for lower rates. Higher rates makes it tougher to finance a deal.
Yeah, I actually think the M&A market has been coming back, and this higher for longer environment is okay for it because at least you've taken off the table the risk that rates will go higher. So we are in a bit of a waiting period, but M&A is picking up and momentum is picking up even in that environment. At the same time, by the way, there's a lot of liability management going on in this higher rate environment with the maturity walls that will be hitting in 25 and 26 from debt that was taken out during COVID. But with regard to M&A, it's actually progressing decently, and I think it will just accelerate whenever the rate cuts begin. If it's September, great. If it's November, okay. If it's January, people are moving forward nonetheless.
When you say pickup, I mean, it was a pretty lousy year last year. A pickup
Yes.
back to pre-pandemic levels that we saw maybe 2017, 18, 19 up until things shut down?
Well, the way I would characterize it is last year was a terrible year. New discussions and new mandates, et cetera, started to pick up, towards the back end of last year. That takes a while to translate into announcements, and then that takes a while to translate into completions. And so this process takes a bit of time, but it is occurring. And where we are in the process right now is, I'd say strategics, companies are kind of back on the playing field. And the next stage is for sponsors, private equity, to become more active also. And that is starting to happen, but it would accelerate back to the previous discussion whenever the Fed pivots to a rate cut.
For CEOs, I mean, rate cuts matter, but it's also a matter of confidence. You feel like the confidence is really there at this point?
Yeah, I think CEO confidence is at a decently high level. Obviously, the broader macro environment matters, and I think there is generally a good situation with a bit of signs of a bit of slowing in certain categories of consumer spending, but overall a pretty good picture with a pretty strong labor market and the consumer holding up very nicely even after running through the cushion of the excess savings that have been built up during COVID. And we are seeing some signs of a bit of a slowdown in discretionary items for certain segments of the consumer, but overall it's pretty good.